Hi everyone. In my last video, I talked about how you would pay yourself as a business owner depending on the structure of your business. And I just wanted to elaborate on that a little bit and make sure it was clear and give you some actual examples so you really understand the concept. So basically, in some businesses, the owner would be paid with draws. In other words, they just draw money out of the business, whether that's with a check or transferring money, and they would take that money and put it in their personal bank account. And then in some businesses, the owner is paid as an employee that gets paychecks and has a W-2. So we're going to look at some examples of each of those situations. So basically, I'm just going to use an example of a business that just started out, and in their first year, they earned $60,000 in income. And then I'm going to assume that operating expenses were $10,000 for the year. So that's going to leave the business a profit of $50,000. So we're just assuming this is before the owner is paid. If this business owner paid themselves with a draw, then they would just be taking money out of the business, transferring it to their personal account, and they would probably have around $50,000 available to draw from that business. Now, that doesn't mean they have to take the full $50,000. They might leave some of it in the bank for future use, for reinvestment, whatever the case may be. Now, keep in mind, from a tax standpoint, they made a profit of $50,000 and they will have to pay tax on the $50,000. It doesn't matter how much that person draws from the business. They could draw $5,000, they could draw $25,000, they could draw $45,000. It doesn't matter. The business is going to pay tax on the profit of $50,000. And the draw account is not a business expense. So whatever they're drawing out, that's not a deduction. So just keep that in mind, that they would pay tax on that full amount. Okay. And then if this business is a corporation and paid the owner a salary on a paycheck as a W-2 employee, then that would be a business expense that the business deducts. So under this scenario, so under the draw scenario, the whole $50,000 is a profit. Let's just assume that the corporation pays the business owner $45,000 as a salary. Okay, under this scenario, that $45,000 is a business expense. So the corporation will deduct that and have a profit of $5,000. So the $50,000 is taxed either way. Under this scenario, it's all going to be the owner's self-employment income. Whereas in a corporation, the business owner would pay tax as an employee on their W-2 income. So they would get taxes taken out just like any other employee. And then the corporation would pay tax on the $5,000. Now, these scenarios are going to be different tax-wise. This is an extremely general example. The tax rate for someone who's self-employed is going to be different than someone who's a corporation. A corporate tax rate is going to be different. Corporate tax rate is going to be different than a W-2 employee. You know, the self-employed person also pays self-employment taxes. The corporation would pay payroll taxes. So it's going to be different in each scenario. And then the corporation, in this scenario, would have to pay for a payroll processing service more than likely if they were paying someone as an employee, unless they wanted to do all that by hand. And then keep in mind that in a business with draws, a business of someone who's self-employed, they're going to have to pay quarterly estimated taxes. And then same with a corporation, they may have to pay quarterly estimated taxes as well. So it's really important to work with a CPA try to get them to help you figure out which situation or which scenario is best for you, and then also help you with things like quarterly taxes and things like that. So I hope this video cleared up a few questions. If you had any, I will link the other video in the description, and let me know if you have any questions. But again, I can't really answer personal tax questions based on your personal situation, but I may be able to answer some general questions if you're still not clear on the information from this video. Thank you so much for watching.